Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Well, happy November, first day of November. I hope everybody had a good Halloween. It was my birthday. I had an excellent birthday. Thanks in part to friends and, of course, my fiance. She really made everything special for me over the weekend. For today's episode, I want to discuss Tesla and where it's at as far as stock price, and is it overvalued, right? Has it run too much too soon, too quickly, or is there more to go? Do we have to fill in this gap that we currently have from the 900s, or can we continue to move higher without filling that gap? We're going to answer all these questions today in this video. I had a lot of conversations over the weekend with people who were saying that Tesla is overvalued now. And, when pressed to discuss why they believe that, we never got real solid answers. In fact, I think I was even able to change their way of thinking, their perception of what might have really happened. So I want to unpack all of that in today's video. We're going to uncover it. But before we do that, do me a favor, hit the like button, hit the subscribe button, ring that bell. And we're just going to go ahead and take a look at today's Monday stock market opening, which is about to happen right now. So let's just jump into my Webull account and we'll look at that and just see how the stock's going to open today. And then from there, we'll do some technical analysis about what's happening with this gap. Are we going to fill it or are we not? All right, let's jump into that now. All right, so here we see it's 9:30 in the morning, East Coast, and Tesla just opened up. So nice move higher. We can see already here, almost 3% up. First 30 minutes are always very volatile. I always say don't ever do anything in the first 30 minutes or last 30 minutes of the stock market day. I'm going to go ahead and do some analysis here, but keep in mind the point of this channel, the way I invest, is purely long term. Okay, I when I say long term, I'm saying a short horizon would be 4 to 5 years. So when we say long term, we're thinking 7, 10 plus years is what we want for our outlook of our investment. Now, I'm not somebody who relies on technical analysis or anything of that nature, but it is fun to look at, and it is something that's good to know, if for no other reason, just to have more knowledge for yourself and understand what's happening on the day-to-day, right? Because if you understand from a technical perspective what might be happening, then on a very bearish day, it may keep you rational, keep your mind in the right direction for those long-term gains. So again, here we see we're about $30, $27. We're fluctuating between 2 and 3% right now on the open. We'll take a look at this in a second. But I want to address this whole gap issue right now. So I'm going to change this time frame. We're going to bump this out. Let's just say 1 month. And then let me zoom in here. Let me actually zoom this back out. Let's go to the day. And here we will be able to see that gap right here. So this is the gap we can see. So we had a close of 9/11 right here, and that was October 22nd. And then we bumped all the way up to about 9:46 on October, 25th. So yeah, this might be, this is about right. So from 22nd to 25th essentially is what happened there, with the weekend being in between. And normally what happens is when you have a gap like this, it needs to backfill. So in other words, one of these candles, you can see these wicks here, right, should overlap where this gap was. Now, when we talk about gap filling, the majority of the time, I would say almost 100% of the time, if you're thinking purely technical, whenever a gap occurs, it has to be refilled in order to move higher. But most gaps happen because of an exhaustion. So in other words, the stock has run so much and it has gone up so quickly that the stock and investors and just the amount of energy behind that move has been exhausted. Now with Tesla, I would say that this is a different type of gap. This is what people call a breakout gap. In other words, breakout gaps happen when there's a new trend or a new paradigm within the stock has occurred. And I think that's what happened here for Tesla. And so this was all happened around the same period of time. A lot of things happened. One, we had Q3 earnings, which were good as everyone had expected. margins for the automotive side of Tesla were, at record highs. It was 30% with credits, about a little over 28% minus credits. So just, record margins there for Tesla. And then they also had some other things happen, right? They got a upgrade from for their credit rating, so they're just under the tranche or the level needed for investor grade investments for their, just so they can get more credit, more debt, things of that nature. And it's just crazy that they're not considered investment grade because they literally have more cash on hand by 2 or 3 times at this point than they have debt. So, it's just ridiculous how low it is. But that credit rating allows a lot of other investors and mutual funds and other companies who have certain rules to potentially come in and buy, right? Those institutional buyers is why we have this huge jump, right? This isn't just going to be retail investors like you and I. This is, big money coming into it. So that's one reason. Q3, earnings, results, all that, that's another reason. But then we also had the whole announcement of Hertz, right? The 100,000, potentially 200,000 order deal with Hertz, with Uber, with Carvana, and Tesla, right? That whole ecosystem where it's really Hertz that's brokering all of this. So Hertz would buy 100,000 vehicles, potentially 200,000 vehicles from Tesla. Then Hertz will lease about 50,000 of those out to Uber so that Uber drivers can rent them out instead of having to pay their own car payment, insurance, or anything of that nature, right? All they're worried about is renting it from Hertz. This benefits Uber because if Uber did it directly, then Uber has to recognize drivers as employees. So this is a workaround for Uber. Uber gets the latest and greatest technology. Hertz gets the whole deal. They get to look like out of bankruptcy, they're this leader in innovation, which is, a nice buoy for the current Hertz CEO who was kicked out of Ford because supposedly he was not accelerating the movement towards electrifying Ford, which is kind of ironic now that we see what he's done here for Hertz. And then it also helps Carvana because what Hertz will be doing is instead of selling their vehicles back onto the market, they're going to be going through Carvana. So it's this beautiful kind of relationship of technology. And though the reason this is really big is because this was the first massive fleet order for electric vehicles. The fact that they chose Tesla, and then just to, put a bow on it and just, make it all beautiful. Tom Brady's on there, with all of the ads, 3 commercials. Tom Brady drives a Model S. He has for years. He's the epitome, him and Giselle, of, being green, about, sustainable energy and environment, things of that nature. We've all seen all the amazing stuff Giselle's done down in South America. But all of this kind of combined together to give us this rather big breakout gap. And what we notice is the difference between exhaustion gaps and breakout gaps is that breakout gaps seldomly have to be filled. Okay. And so what that means is there's a very strong possibility that we do not come back down here and retest these levels, right? That is a strong possibility. I'm not saying that we're not going to. We very well might. And if that happens, right, we're looking at like $910 $910 a share from where we currently are now at, $1,131 for today. So that's what this means, right? So don't think that just because there's a gap, it means it has to go down. And the reason I stress that is because a lot of people are sitting on the sidelines waiting for things to correct or Tesla to come back down to earth. And if there's one thing we should know, just using Tesla as an example, and you can extrapolate Tesla out as a bigger picture, the bigger macro picture, is that you should never try to time the market, right? That's a fool's errand. I have several friends who, right when Tesla broke $1,000, they were saying, yeah, I'm just going to wait for Tesla to come down. It's ran up too much. And here we are, another $120, $30, $150 per share higher, right? So they missed the boat on that. And who knows if it's going to come down. It might consolidate where it's at right now for a while before its next leg higher. And so speaking of that, right, let's talk about consolidation. So again, if we back this out, let's just look at 6 months right here. And let's just switch this over to, let's say, a day perspective. You can see here, Tesla's gone, just straight up, right? This has gone almost in a direct line up. And so what we really need to see is some consolidation at this point. And that I will agree with. Now, where's that consolidation? I don't know. Does it mean we come down a little bit? Yeah, it might. Or it might mean that we stay right here, just, above 1100 and we just consolidate. You can see right here, we've come back down a little bit. We're down to $13 up for the day. It's just opening. But if we could see some consolidation here, this could be a nice floor to move up higher. Now, if things do start to sell off, well, that's when I would really start looking for that, 900 level, right? Because the second things start to sell off, or if we, get under 1100, if we get down to, the very low 1,000, that's when we're going to start seeing that gap become a gravity pull for the stock price. Now, if it does come all the way back down and fill that gap, in my opinion, that's going to be the time to buy. And it's interesting. Here you can see this channel I had before the stock broke out, and that's right about where this gap would be. And so I would see this channel itself, right, the top end of this channel, as a resistance for the stock, and to jump right off of it is what I would expect. So this will be very interesting to watch. But again, I would honestly be more convinced, because of the type of breakout this is, that it's just going to move sideways. So anyways, this is just some, very low-key technical analysis, just some stuff I look at. I don't think this is something that you should make decisions based off of. I think if you want to invest in Tesla, invest in Tesla. Don't wait for the right time. Don't wait for the right move. It's never a good idea to time the market, whether it's anything Tesla, S&P 500, doesn't matter. Okay, you can't time the market. You might get lucky once, but you're not going to get lucky twice or 3 or 4 times. It's not sustainable. So just get in there, set it, and forget it. If you want to have fun, do what I do here. Again, this is my Webull account. I don't actually use this as my platform. I just use this to look at the stock because it's a very good tool. It really is. But I like to watch it. It's fun. It's generally fun to watch. It's exciting, but I'm not making any decisions on it based on what happens on the day to day, right? That's a fool's errand. I don't know anybody who's actually gotten truly wealthy with that practice, right? Okay, so with that said, let's talk about, is it overvalued? Is Tesla overvalued? Well, this is such a subjective question. Based on how you see Tesla, that will shape your opinion. I try to be very conservative, and I think I am very conservative when I talk about Tesla's evaluation. I personally think Tesla is still undervalued at these levels. Now, I know what you're thinking. Well, if that's my thought, then I'm really not that conservative. Let me explain my rationale here. With my models, I never include anything for full self-driving. I never include any idea of a robo-taxi. I don't factor in Tesla insurance, and I most certainly do not assume Tesla Energy is going to be anything as big as Tesla Motors in the short term. Okay, as we all know, Elon Musk has said that he thinks Tesla Energy can and probably will be larger than Tesla Motors, right? The automotive segment of Tesla. I assume all of those at zero. And those are arguably huge, huge revenue generating business segments of Tesla. Instead, all I really focus on is the unit of vehicles they can sell, the margin they sell it at, the average selling price, and then whatever PE you want to put on it. Based on that, that's what I do my calculations on. And based on those calculations, to me, this is undervalued, right? We could easily assume that Tesla should be at about, $1,800 to $2,000 a share. Again, depending on how you see those numbers change and what you think the vehicles sold will be over the next 6 to 18 months. And so that's how I get to my valuation. If you have a different opinion, well, that's obviously going to skew things. Sometimes it's best to kind of take a step back, and we hear all the naysayers and we hear what they say about Tesla being overvalued. It's run too much. It's the size of all these companies. And what I had a discussion actually yesterday during the Buccaneer football game, watching Tom Brady. Unfortunately, we lost. I had a discussion with a friend of mine that I grew up with. He was saying to me that he thought Tesla was overvalued, right? Or it's run up too much. I pressed him. I asked him, why? Why do you think that? And, all he talked about was how the stock ran up. And as we all know, stock running up isn't an indication of something overvalued or not. And what I suggested to him is that perhaps that's not an indication that it's overvalued, but perhaps Tesla has been undervalued for the past year. As we all know, last time it hit $900 something, I think it was back in January. And now Here we are in October, now November 1st, and we're just now above those levels again. So perhaps over the last, 8 to 10 months, we have been undervalued, and Tesla is just now finally catching up to its valuation that it should be at. I'm not saying I'm 100% right. I'm not saying he's 100% wrong. Make your own opinions, but it's just another way to think about it. Perhaps it's been suppressed. And this is what we have seen historically for Tesla. A lot of times we listen to people who have negative thoughts, or people who have, Tesla's going to crash opinions. It's going to be on fire. They're not going to be able to sustain this. It's overvalued, right? All these people with these negative sentiments, they have been wrong for the last 10, 15 years. So why do we continue to listen to these people? Instead, why don't we listen to some people who have been right about Tesla for the long term, right? People who have been right over and over with Tesla, because clearly these are the people who have had actual success. They've actually made money with Tesla, and they obviously understand something that the naysayers don't, because they're the ones making money and the naysayers aren't. So let's listen to their perspective of Tesla, and is it overvalued? Has it moved too much too fast? And let's see what their thoughts are with the current stock price.
Start with Tesla today, because you've been outperforming the markets pretty handily because of a lot of your investments, not the least of which is Tesla. Tesla crossing over $1,000 a share, which is pretty remarkable when you consider that you own almost 6 million shares of Tesla for a valuation of about $6.1 billion. And your cost average for that is $42.88. Let me say that again. It's now over $1,000 a share. Your cost average, $42.88. That's a remarkable gain, and it tells just about what a long time you have been such a bull and considered Tesla to be a great place to be. How long ago did you make that investment? When did you start?
2014 to 2016 when we invested. But that is sort of a normal type of investment, being a very long-term investment for us, being 7 years, 8 years so far. I think we'll probably be an investor for another 10 years at least.
So I want to stop there real quick. This is Ron Barron. If you can see here, Barron Capital Investments. Now, Ron Barron has been invested in Tesla for 7, 8 years now. And he's taken it from $42 a share, split adjusted, all the way to over $1,000 a share. He essentially had a little over $300 million investment and turned it into $6 billion. Okay, and as he mentioned here, long-term investment, right? That's how they do it. They don't look for these quick little winners, this quick day trading schema type attitude. Not that there's anything wrong with that, to each their own, but as far as my appetite, as far as what I have deemed successful for me and my investments, the long-term way tends to be fruitful, right? This whole patience and consistency ideology I talk about constantly, right? Patience and consistency is the key to everything, whether it's finances, your relationships, your health. It's something that I think stands the test of time. And that's what we see here with him, right? To go from $42.88 all the way up to what it is now, right? This morning, we're looking at over $1,100 a share. That's insane. That's $6.1 billion he turned it into. Now, he also mentioned there that they plan on holding for another 10 years. So again, Ron Barron has been right about Tesla for so long. He has seen these crazy gains. And even though he's gone from, and I said it incorrectly, so excuse me, $256 million of their initial cost to $6.1 billion, even though he's had that growth, he is still holding on for at least another 10 years, That just shows you the conviction that even someone like Ron Barron has in this investment.
Same with SpaceX. In that $54 billion of profits is included about $6 billion from Tesla from a $380 million investment 7 or 8 years ago. But it wasn't smooth. The business was continuing to increase, and the stock price gyrated fairly significantly in the first several years because they weren't very profitable. It's very, very hard to accomplish what they have, very hard. And in my lifetime, in the 1950s, there were maybe 50 car companies. They all failed.
Something interesting he just said there, right? One, he talks about how, the stock is going to go up and down. It's going to gyrate up and down, right? It might go up, 30, 40%. It might come down 20, 30%, right? That's the evolution of a company that's on the path to exponential growth, right? As more people start to see what's happening, they're going to pile in. And then, as nature would have it, some people get scared that it's moved up too much and they want to sell out, so things come down. But the important thing is to look at it from a longer perspective, right? When you start looking at things from a 1, 2, 5, 10-year perspective, we see a very beautiful line up and to the right, which is what we want. And I guess right would be this way. And then he also mentions how in his lifetime, he has seen over 54 automotive companies go out of business, right? The automobile the industry is plagued with graveyards from former companies, right? We've seen bailouts happen, but even before that, right, all through the 1900s, so many startup companies that came out and were successful for a little bit, and then they just went under. So it's a very difficult industry to be in. And the fact that Tesla is not only revolutionizing it, but still alive and still the leader, and having all of the OEMs, the people who have survived, having to pile in behind and follow them is just beyond impressive.
And but most people, his friends, Elon's friends, told me they thought this is I shouldn't invest, and they thought that he wasn't focused on making profits short term, and I thought that was going to make it an unattractive investment. But the way we invest is that we're investing in businesses that are investing in themselves, that are penalizing current profits to become much larger businesses. That's what he was doing.
And that's the type of investing we like to do. Okay, it's very reminiscent of what we see with ARK Invest. It's reminiscent of what Warren Buffett and Munger do. It's what Ron Barron does here. And it is the methodology that has proven to stand the test of time. Again, we look at a company like Amazon. Amazon was unprofitable for so long, and people would constantly complain and argue, oh, another bad quarter, another miss, whatever, because they were choosing to take their profits and inject it back into the company, right? The more they did this, the more this grew a solid base for them to eventually be able to lift up into profitability and have all of this investment really start reaping benefits for them. And that's what Tesla did for many, many years, right? They just kept reinvesting. They kept reinvesting into R&D, into battery technology, into how we can, make things more efficient. How can we cut things down, right? Just all of these improvements. And that starts to stack up after a while. Like Ron Barron says there, if you're really just worried about quarterly earnings and be profitable each quarter and, how that's going, well, there is a cap onto how well you can do with an investment like that. Mainly because you're looking at it from such a small perspective. If you span out your scope, there's a lot bigger of a chance of success, in my opinion, and with greater financial results. I think that's just proven over time, right? From Amazon to Apple, those were my biggest holdings. Apple first, and then Amazon. Now I'm in Tesla, right? Now, it doesn't mean everything I've ever invested in has been right. I've had some investments that I wasted, 4 years on, didn't pan out. But that's okay, because I had these other ones that did pan out, and, they have allowed me to take those chances and make those mistakes. But what we see here is this constant preaching of hold, invest for the long term, and that is how we get true wealth, and that's how you can grow into a place within your own portfolio where you can become financially independent a lot faster than you may think.
Gene, my first question for you is: you look at all the other automakers, and you look at their valuations relative to Tesla. Are they all undervalued?
No, I don't think so. And this is
you think they're properly valued, and Tesla's properly valued?
Well, let me back up. Is that I think that there are pockets for some of these other automakers. Obviously, Ford has done a great job. I think that there can be companies can turn around. They can get a tailwind within this. So if you look at the broader industry, I don't think that the broader auto industry is undervalued. I think there are companies within that. I think you're going to see some companies that have been around for 100 years that will be a fraction of what they are in a decade. And so I think I'm not trying to be cute with the answer, but I think there are pockets where some will surge. But as a net, I think the auto industry is going to struggle with this transition. And just quickly regarding Tesla and its valuation, it is, as someone who takes a very measured approach to valuation, it seems absurd that we're at $1 trillion And what may seem more hard to believe is I believe this can be a $2.5 trillion company. And let me just quickly frame that in 5 years. Granted, it's a ways away, but this can be, we can go from 70 billion to 400 billion in revenue, a 6.5 multiple on that, which is hardware, software services, Apple-like multiple, is that $2,500 stock. And so I think there's still room for upside with Tesla. I think we're going to be having this conversation for years to come.
Been a more calculated analyst, and even he's saying that at $1 trillion, it seems ridiculous that it's at that valuation, because it should actually probably be higher, right? Gene Munster is saying that by 2024, 2025, we should be seeing about $2.5 trillion valuation for Tesla. So where it's at right now, right, if you back it out, it just seems like it should be a lot higher than what it is right now, which goes back to my initial statement to my friend when we were out at lunch watching the football game, that I think Tesla is just catching up to where it should have been all along, right? It's been undervalued this whole time. So here we see Gene Munster stating that again. Hopefully this video helped kind of get a little understanding of where we are. Can we run up more? Or have we run up too fast, too long? Do we need to consolidate? Are we going to fill the gap? Right? A lot of those questions come up, and sometimes it's hard to really make sense of it. Nobody can predict the future. Nobody knows what's going to happen next. It's impossible. Okay, but we can take a look at these things and just make educated decisions. At the end of the day, don't use any of this, in my opinion, to make that the reason why you get into an investment, right? If you're ready to get into Tesla, I would say just do it. Don't waste time, trying to time it perfectly, because inevitably you're going to be wrong. All right, if history has shown anything for me, is that anytime I try to get into an investment, and if I've ever tried to time it, I'm always wrong. Every single time. I've never been right. Okay, but when we talk about over the long term, right, after 2 months, after 3 months, after a year, after a few years, I tend to be on the right side of things. And that's what really matters. So we're going to leave it there for today. So do us a favor, hit the like button, hit the subscribe button, ring that bell. Hope you enjoyed this video. Hope you had a good weekend. Hope you enjoyed your Halloween. And now it's time to get ready for Thanksgiving. So get ready for that. I'm excited. It's going to be a great end of the year. It's going to be great for Tesla. It's going to be great for the stock market. Hopefully we all get some great returns moving forward. And with that said, I'm going to leave it there. I love you all. Thank you for watching to the end. Peace.